Hello my fellow freedom builders, and welcome back to the channel to another video in the hydrogen series. Today we're going to have a look at Plug Power, which is an about 20-year-old US based hydrogen company. And we started the series out the other day with the NEL, the Norwegian company that was tied up to the Nikola with a lot of orders. But today we're going to have a look at a company that is very different from that. First of all, if you want to participate in the competition for a 1 ounce silver coin, then you just have to write a comment down in the comment section below what you think of the video or new ideas for stocks to analyze, and you are participating. So in a couple of days, I will find the next winner. Let's get to the company here. We have the Plug Power, and this is their company presentation from June 23rd, and I'll just run through it very quickly. We'll have a look at some of their products, and we will have a look at some of the numbers, because as with many of these hydrogen stocks, if you want to invest in Plug Power, I can say this up front, you will have to not look too much at the current numbers, because pretty much all of the hydrogen stocks right now, the companies, they are running with a loss, and if you want to invest in them, it should be because you are believing that we're going to see this hydrogen society in the future. And I think that Plug Power is actually a reasonable good player in this niche. So let's have a look at it. First of all, we can just jump to the website, by the way, because what they are known for, they are diversifying into a lot of different hydrogen areas right now, but what they are most well known for is their material handling material. They have some fuel cells, and they have been built into these forklifts here, and I guess if any of you are working in a place where you're using forklifts, this is pretty much where you have met them, I guess. That is the forklifts here running around in different warehouses, and they are used in Amazon and Walmart and so on. But what they also have is a hydrogen fueling technology, so they use their own hydrogen to put into fueling stations at these warehouses. And they are branching out right now, so they also have some on-road vehicles, some last mile delivery trucks, and some larger trucks as well. But let's have a look at that during the video here. When we're looking at the presentation here, the first couple of pages is actually about some new acquisitions they have made, and I'll just jump or skip them right now and return to them later. Because first of all, what Plug Power actually is, or what they are aiming for with their latest acquisitions, is to be what is called a vertically integrated company. And if you think you've heard that term before, it is because Trevor Milton from Nikola has been shouting about how Nikola was a vertically integrated company, even though they were nothing of the sort. But in Plug, we actually see some true vertically integration, because what that means is that you pretty much have all the entire chain, the entire value chain, from the beginning of the production to different middle production areas. You're producing all the stuff yourself, right to the final product. And what we can see Plug Power is doing is that they are, with their acquisitions, they actually have some hydrogen generation, meaning that they have the electrolyzer technology, the PEM fuel cells, to actually make the hydrogen themselves. They have the liquefaction here. They have all the logistics. They have the consumer equipment. You saw the forklifts and the trucks and so on. So with the acquisitions they have made, they actually own the entire production and value chain, right from the beginning where they produce the hydrogen and out to the consumer. So what they actually do in a mini scale compared to what Nikola was aiming for, or is aiming for, is that they are producing the hydrogen, they own the hydrogen station, they sell the equipment to the customer, and they provide the equipment, the hydrogen that is used on a day-to-day basis. And from that point of view, I actually like Plug Power quite a lot. When we look at it, they are also they're planning some regional hydrogen networks where you can get your different trucks and cars filled up with hydrogen. They have 5 spots right now they are aiming for. And then, of course, in the presentation, and that is, I guess, a standard, the company has to tell about how big a market they are tapping into with the material handling and the electrical vehicles and the stationary powers and the overall hydrogen economy. And of course, $2.5 trillion is a number that is only equal to the Fed money printing these days. But if the hydrogen economy really comes up running in the next 10 to 20 years, then this is the market that companies like Plug Power and NEL and so on is tapping into. And they are telling how the hydrogen, of course, is the solve-it-all solution here. Now, the company target, and you should try and remember these numbers because they are quite different from the numbers we will have a look at in a second from the balance sheet and the income statements for Plug Power here. Because what they are aiming for in their 2024 financial targets, and they actually just increased this because they're getting a lot of new orders in. But the revenue they are aiming for in 2024 is $1.2 billion. And without having shown you the current numbers, I can tell you this is quite a lot larger than their current numbers. So they are very ambitious and they are upping this target right now. The adjusted EBITDA is 250 million, and that is with a plus. That is a profit in the EBITDA column here. And I must say this is even further from what it is now because they're running with the loss right now. But let's see if there's any chance they can get up here. If we just scroll up to the top here and have a look at the 2 acquisitions they just made. They have just bought the United Hydrogen, and that is a hydrogen production company. Right now, they have the largest production plant in United States with 6.4 tons per day of liquid hydrogen. And they are planning to up that to 10 tons per day, called TPD here. And they have a delivery network, liquid tankers, gas trailers, and so on. They have some smaller hydrogen plant as well. So what they are planning with this is that they are, right now, they are delivering so much hydrogen that they have to buy some of it. But it is clear to me that they are planning on or they are aiming for getting in on this area as well, so that they're producing most of the hydrogen that they should deliver to the forklifts and so on out at the customer sites. So they have sales channels and knowledge base and so on. The other company that they are looking at here is something called China ELX, or they're not looking at it, they just bought it, and that is a producer of electrolyzers. So you can imagine that a company like United Hydrogen, they will have to buy electrolyzers to produce hydrogen. So why not also produce your own electrolyzers? So right now with the China ELX here, they are producing the electrolyzers that will be used in the United Hydrogen to produce a hydrogen that should be put into the forklifts and trucks that where you're producing the fuel cells for. So that is actually, I like the thought of this vertically integrated system here. So far so good. Now, when we're looking just at the company, we have in Stockopedia here, you can see it is a rather small company, even though they have 20 years of history. They are down around 4 billion euro. It is, of course, an okay amount, but it is not a huge company in that sense. Right now, they're calling it a momentum trap, and when we see the numbers, you can see why. Because it has been running up, but it is not, there's not really much earning into this here. We can see down here that the PE and PEG ratio and all of this is at a 0, and that is of course because when we look at the earnings per share normalized, they are simply running with a loss, and they will be for some while yet. Negative cash flow and so on. But they have been out on the market getting themselves some new working capital. They have taken on some loans, and they have also been issuing new stocks. So they are, the loan part I'm a bit worried about. And the reason for that, I found a document saying that they are paying somewhere between 10 to 12% on their loans right now, on the borrowed money. And that means actually that they are graded as a junk bond, meaning that the people that are lending money out to them, they are not too thrilled about the setup in the company or the security in the company. When we look here, just in Seeking Alpha, that's because they have a bit more numbers here that I need. We can see here that we have the revenues here, and that is from 2019, that is $230 million. And remember, the goal was actually to have a $1.2 billion in revenue. That's almost 6 times this in just 4 years. So that really takes some growth. But if you see the revenue year over year here, it grows quite a lot. So that is great. Let me just minimize the numbers here. I hope you can see it, because what we can see that the cost of this revenue is to get the 260 million in revenue, and this is in trailing 12 month. So it is going up a bit here. The cost of this revenue is actually 238 million. So they are ending up with a gross profit of $21 million. And that is only something like 7-8%, something like that. Then of course they have some SG&A here, selling, general and admin expenses, some R&D expenses. So they are ending up at an operating income of minus 70 million roughly. And that is a bit, they're burning a lot of money, to be honest. Another thing here is that if you're looking at the interest expenses, then over the last trailing 12 months, they have paid $17 million in interest expenses. That is quite a lot when you're looking at a total revenue here of 260. If we're looking at the quarterly here, we can see that in the June quarter here, they had $68 million in revenue. That is also going up. That is very nice total revenue. We have some gross profit at $5 million. Operating income at 26, but when you're looking at this in this quarter, $13.2 million, that is roughly 20% of the overall revenue, and that is not even profit. That's 20% of their revenue that is paid out in interest expenses. So that is something I am a bit worried about. But of course, if they're growing this revenue and doubling and tripling it, and they can keep their interest expenses at a fairly okay level, and maybe even having their R&D expenses at kind of the same level, then we might have a good case here. You can see also that the SG&A here, the administration part and selling, has gone up almost double, and I'm pretty sure that is due to the acquisition of these two companies that I just talked about. So it is not like they have hired double the number of people without taking on a lot of extra sales. So there are some numbers here where you can see that they are burning a ton of money. And the reason why that could be interesting to buy a company, because normally I would not even consider a company like this, but if you believe that this hydrogen economy is coming out quickly, then it can definitely be interesting, because of course if we are looking at the yearly numbers here, and we are taking the yearly revenue here and times 5 at least here, then definitely there could be some bottom line profit, no doubt about it. If we're looking at the in here at tip ranks, what the analysts are saying, I have chosen only to look at the higher ranking analysts here. Then they are pretty much giving us targets between $9 and $14. And right now, the price, if we're looking at Plock here, we can see the price right now is $13.36. Just below $13.50 here, and that means that there is more downside than there's upside at the current price if we are listening to the analysts. And you can see some of them are 3 to 1 month old, but the latest is 4 days ago, and that is a hold here. But then we have some buys, we have some holds, but yet again, not with a lot of upside. So that could be some concern here that we could have. Another concern If I'm looking here at the Guru Focus, and by the way, they've gotten a very new smart feature here where they're taking a lot of their value numbers. They have their value ranked down here, but they have a lot of their price to book, price to sale, and so on, and they're putting in that into one equation here and showing it graphically, so you can get an idea of whether this is under or overvalued. And right now, of course, I could say the Plug Power is extremely overvalued. And that is fair enough. You could not really buy a company like this. Of course, you could at some point, but at this point where hydrogen is the big thing, and we are talking Nikola, and we are talking about hydrogen society, then you cannot really have a company like this running with a deficit like it does and have a value bet. No way. But that is not really what worries me. We can see down here what we also saw in the Stockopedia. We can see that the debt is accelerating. But what really worries me is this, because here we can see the insider traders, and normally that is not something I'm looking too much at. But when I can see that since February here and up until now, we have seen a huge number of insider sells here, that worries me a bit, especially when I look at the price. I can see what it has done. And of course, there'll be some of them that is a bit annoyed of them selling down here at 4 when they could sell up here at 13. But looking at the price here over time, we can see that Plug Power has actually been up at 100 or so, and we could hope for it to get up there again. But we are in a range right now where it hasn't been for, since the financial crisis actually. And the question is, what is that a sign of when the insider starts selling? It might not be a sign of anything other than, well, now we can sell some of our stocks. And normally when I just see a CEO or CFO sell some of their stocks, it is not really something I pay attention to. But when we see such a large number here of insider selling, that is kind of a sign of worry to me. Maybe they know something we don't, or maybe they are just tired of waiting for the stock to get higher and they are cashing in. I'm not certain. But to sum this up, when we look at the company overall, I really like the vertical integration part of it. I do like that they are really scaling up, and they are going for the electrolyzers, they're going for the storage, the logistics, the products out of the companies, and I think they have a very nice future ahead of them if they can get over this time, over the next 2 to 3, maybe 4 years of burning cash. And as of right now, it doesn't seem like they have a problem issuing new stocks or getting some loans to finance their growth. But of course, with a company like this, it is also a question of, do they run out of money? My assessment of this right now is that there is so much hype about the alternative fuel sector and niche here that I actually think that a company like Plug Power is one of the companies that the investors will love, because it is not a new IPO. They have not done a reverse merger to get some quick cash right now. They have actually been in business producing products for the last 20 years. And when we look down here at the front page of their website, we can see down here the total runtime hours. That is simply how many hours their products have been running at the customers, how many hydrogen fills they have made, and then of course the classical how many pounds of CO2 they have removed. And that's, I don't know, the number sounds great, but actually it is just a bit of spin here. But what I'm actually interested in buying a company is, do they have products out at the customers? And you know that one of my points of critique with Nikola was that they kept talking about their visions, but they didn't have a single product out there. You know that standard joke right now that Tesla have more products in space than Nikola have products at the customer site, and that is of course just one. And that means that Nikola is not out getting data, getting experience, and that is one of my really big concerns in the Nikola case. except of course from the lying and the former CEO and founder and all that stuff. But what we can see here at Plug Power is that they are getting experience, they're getting data, they're getting they're getting mileage out with the customers. Then of course they are branching out to some new areas with the last mile delivery trucks and the larger trucks, and that is of course some new areas they're getting into, or at least expanding into. But they have already worked on a truck for, I think it was Federal Express, alongside, was it Workhorse? I think it was Workhorse. They made a truck where Plug Power were delivering the fuel cells for. So they have a lot of experience, and I do like that. I do like the vertical integration. I am not too fond of the financials, that goes without saying. But then again, if you want to get into a niche that is revolutionizing some area, some fuel, some transportation, if you want to get into a niche where it is young and cheap, then I think that Plug Power could be one of the companies you should be aiming for. Alright, that's it for now. All of this, of course, is just my opinion. I'm not a financial advisor, so do your own research out there. Remember to subscribe and like and hit the bell notification, all of the buttons you can find down there below the video, and I'll talk to you again soon. Take care of yourself and your money out there. Bye for now.